Hello everyone, Dividend Enjoyer here, and today I'm doing a stock analysis video on Kroger Co., ticker symbol KR. The stock currently trades for $58.70, and it's up 26.92% in the past year. The market cap of the company is $42.48 billion. The price to earnings ratio is 15.53, and the annual dividend yield of Kroger Co. is 2.18%. Quickly go over Kroger's dividend growth rate. The 1-year dividend growth rate for Kroger is 10.91%. The 3-year dividend compound annual growth rate, so how much they've raised the dividend per year on average for the last 3 years, is 16.08%. The 5-year compound annual growth rate is 15.25%, and the 10-year compound annual growth rate is 13.63%. So they've been increasing the dividend on average per year way more than inflation. And investors that got in very early are getting paid way more than they were 10 years ago. A weighted average cost of capital for Kroger stock, as you can see, I have my cost of equity here, my cost of debt after tax here, and then multiply those costs by the weightings compared to debt to equity of the total value. That's where we get our weighted average cost of capital. And for Kroger, it is 4.51%. Free cash flow model valuation for Kroger. But before we get more into it, I just want to say that what I'm about to say is not financial advice. I'm not a financial advisor. But I don't think that fundamentally I would want to own Kroger, just because I don't feel like they have some of the intangible things that I want in a business that I personally would invest in, because I want businesses that are monopolistic or just leaders in their industry. And it's very clear that Kroger and their industry needs to be growing. That's another thing. Kroger pretty much doesn't hit on any of these things at all. The industry they operate in grows at maybe 1% a year, maybe. They're not the leader. Walmart's clearly the leader, or Costco. So they're not doing anything differently. They're not really leading in any way, I guess. And they don't make anything that's different or monopolistic. Like, I could not tell the difference between Kroger brand cereal and Meijer brand cereal. So I do think that Kroger is probably a more defensive stock than most and will give you a reliable dividend increase, as seen in the chart I showed you of the dividend compound annual growth rates. I don't know if it's completely sustainable, but just to think about the business side of it before we get into the financial side of it, because I think it's easy to look at something and think that it's undervalued if you want it to be undervalued, and not think about the actual business value and be very critical with the company on growth expectations. So to break even on this stock and buy it at completely fair value, you have to have around a 4.8% average free cash flow growth rate over the next 9 years, with perpetual growth of 2.5% and our discount rate that we calculated earlier of 4.51%. So according to my model, if you're at 5% or above, if you believe like Kroger can grow the free cash flow by 5% on average over the next 9 years or above that, then there's going to be at least 2% upside to buying Kroger right now at the current price while making this video. But if you think it's going to perform lower than that, there's significant downside to buying Kroger right now. So that 4.7%, that's the amount that analysts are expecting Kroger to beat or increase their free cash flow on average over at least the next 9 years. I think it could go either way. I'm going to be honest. I think that if I was rating Kroger, I would probably rate it a hold, because if you already have it, I probably wouldn't sell out. But I also don't think you should be buying into this, because I think that there are better things that you could take advantage of probably. Again, not financial advice, just putting my analyst hat on and trying to give an opinion. But I think that growth is probably going to be around 4%. Either between 4, which would be a downside of 6.93, and maybe 5. I'll go 5.75 on my higher end, which would be an upside of 9.21. So I said, the upper part of my range would value Kroger at $64 right now, and the lower part would be 54. So I think my price target of Kroger would be anything below 54. I think you're probably getting a good deal personally. But again, things could change, new numbers could come out, they could underperform. I also don't study the supermarket sector very closely because it doesn't have the kind of growth I'm looking for. But I would imagine personally that Walmart or Costco are probably going to be better business models than Kroger. So I think you should hold off on this stock for right now, but let me know what you think in the comments. Maybe they will beat earnings. I'll look like an idiot or something. I don't know. But this is just my opinion. That's kind of what I think. I'm not touching this stock. That's the video. Thank you.